Hi, this is June from Turning Point Life Investment, and this is your market analysis for February 6, 2010. Okay, we've been having quite a volatile week this week. I mentioned in my last video to wait for some kind of relief rally, some kind of bounce to short the market again. Hopefully you got in around this level. We had some pretty decent follow through on the downside, but on Friday, a very huge hammer or doji candlestick has formed. So that at least tells me the downside is probably halted or stopped for now, and we can probably expect some kind of bullish follow through for earlier next week. Now, going into an hourly view, we can probably expect some kind of pullback at least towards this resistance around the 107 area. That was the previous low, and usually support when it's broken acts as new resistance. And that also corresponds with the 20-hour moving average. If there's any more upside potential, probably 108 and maybe even all the way to the top of this gap. But if the market can reach this level again, it's somewhat damaging to the downtrend if it's able to get back around this level again. Now, if you're not used to looking on an intraday basis, I highly recommend it, especially the hourly view. You can kind of spot the reversal that was happening in the market intraday. We have a very nice hammer candlestick right here. Prices were getting pretty stretched out from the moving averages, and I've mentioned that before, where you can only pull away, or prices can only be pulled away from the 20 moving average so far before it hits a limit. And also you have oversold stochastic right here, and as I mentioned, you have a hammer candlestick. So when you combine these three together, that's a recipe for a reversal, and we got that within the last couple of hours on Friday. Overall, the market needs to kind of consolidate, rest up a bit to work itself out of this oversold. It can't really continue lower until it's come out of oversold, just to alleviate itself from that extreme condition. So I'm still aiming for this November low around 103. Hopefully, okay, it can hit that area. That would be a 10% retracement of this entire rally we had since last year. But if the market gets back above 111, then that might make me think twice about shorting the market. So just keep an eye out. If it gets back up to this area, something else might be in the works. But otherwise, I'm still aiming for 103.